The consumer price index, its CPI, came in hot. Inflation rose from 2.9% to 3%. Two of the biggest drivers, eggs and housing. Prices for eggs have skyrocketed 53% over the past year. The bird flu is to blame. Meanwhile, the cost of new home construction is also adding pressure to inflation, which could slow down any interest rate cuts from the Federal Reserve. To break down what this all means for everyday Americans, we're joined by Patrick Mueller, RFC and president of Bella Advisors. Patrick, good to have you. Thanks for being here. So what's going on? Democrats are saying, hey, President Trump was elected in part to bring these prices down. Now inflation is going up again. And the White House press secretary, she responded today saying that, the Biden administration left our country with a mess. What's your response?
Great question, and great to be with you, Alicia. And when Trump hasn't even been in office a month yet, right? And they're already trying to blame everything on Trump as far as inflation not being in line, which is a little ridiculous, but it's to be expected as the political game, right? But when it comes to the inflation, it's just a shock to the markets today. As you can see that the markets are down. And so inflation going from 2.9% to 3%, it's more of a psychological shock, I think, to the markets than anything, like going from $2.99 to $3. And with eggs being up over 53%, I mean, that's been a big driver, which is crazy to think like eggs, right? That it'd be such a big deal. But it just has been, and it's really just driven everything up. And here locally, I mean, we've got Waffle House here locally that, has a 50-cent surcharge on each egg. And you've got stores, shop around. I have a stepson that bodybuilds. He's 21 years old, and he's eating 6+ eggs a day.
Jeez.
We got to shop around for eggs. So, one store locally here is like $11.75 a dozen. And we've got another store, right? If you go to Costco, it's $4.21 a dozen. So yeah, make sure you're looking around for your eggs, because we definitely have an egg-demic in our household.
Now's the time to invest in backyard chickens, right? They're outpacing the stock market. The bird flu is really wreaking havoc, no doubt. But how much of this egg inflation is truly fixable through policy, and how much is beyond control? How long is this going to last?
I don't think it's going to last too long. It doesn't take too long for chickens to grow back to full size. And I don't think it's going to a big dramatic shift. And, I would say, give it, 6 months for things to kind of even out. But when it comes to the markets, everything is very headline driven these days. So everybody kind of makes it out to be a bigger deal than I think it really is. And what that kind of means to everybody inflation-wise is that I don't think overall, when you take the eggs out of the equation, new construction costs, if we take eggs and energy out, new construction costs, it equates for 30% of what's left for inflation. Mm-hmm. So as long as you're not, dealing in those two areas, I think it's kind of normal. So I don't think anybody should really worry too much.
Let's talk about that. What's the outlook for the housing market? Because that's a big pusher. It pushes inflation higher as well.
Yeah, one of those things with the housing market is, as we start seeing costs, I think we're going to start seeing new construction costs starting to come down as a lot of the, I guess you would say, regulations with the Trump administration are going to start being reduced. With energy prices, we can anticipate longer term for those to start coming down. And with energy costs that will be coming down, I think within the near future, with all the oil production and pro-energy in the U.S., that's going to start reducing the cost on everything overall. But it's going to take time. The guy just got into office, and, it takes time for those things to come to fruition.
Yeah, it does. Inflation's still running hot. It's sticky, right? We've seen it for a while. Can we expect interest rates to stay, higher for longer now? Forget about the cuts we were hoping for and what President Trump said that he wants?
Yeah, when it comes to inflation, I would say the Fed has already come out. They came out late last year and said that they were going to be slowing the rate of inflation for this year. And I think that we can anticipate that to stay the course. I don't think they're going to start reducing interest rates at the earliest until around summertime. And we saw a surge in the 10-year treasuries today, went up to over 4.6, which that's really good for savers and retirees. We work a lot with retirees, and it's nice to be getting 4+% on your money market accounts and CDs and things of that nature. And then it's also good for the banks. It helps keep the banks' profit margins, and it helps them as well. So when it comes to those rates, I don't see them dropping below 4% this year.
Even though President Trump is like, hey, Jerome Powell, you got to lower these rates.
I mean, you can't take that out of the equation. I mean, we're dealing with one of the best negotiators out there when it comes to that. We saw that from the previous 4 years that he was in office. The man can get things done. So I think we can anticipate that. And when it comes to getting those things done, it's going to create, like we saw the markets down today, and we've seen a lot of volatility so far this year. I think we're going to continue to see that because the administration is coming out with so many new things and new changes. I'm sure it's hard for you guys to keep up on the media side of things
Yes.
with all the different changes that are going on. But it's going to create a rocky market for the year for sure.
Yeah, it's like drinking from a fire hose. Just can't keep up. Patrick Mueller, RFC and president of Bella Advisors, thank you for your time and insight today. Appreciate it.
Thank you.